So a solution, I'm not saying this is the solution. I'm certainly smarter than that to say that. There are a lot of ways to trade gaps. This happens to be the solution I stumbled upon and that works very well for me, and I want to share with you. The gap zone. So what is a gap zone? A gap zone are zones defined by the prior day's open, high, low, and close, and they're potential areas that a gap could actually open up the next day. So I track those each night, and I look at where that gap is opening up the next day. Why do they work? Oh, I'm sorry. Location, location, location applies. So, I mean, you've heard that saying before, and virtually every other business model, it works for gaps too. Location is critically important, and here's why. You inherently have short-term support and resistance incorporated. Yesterday's open, high, low, close are frequently traded areas. If you incorporate the prior day direction up or down, you also have a little bit of the short-term trend, if you will. Gap size is inherently incorporated, right? The bigger gaps tend to happen at the extreme points. That makes sense. And then probably my favorite attribute is trader psychology. And we'll talk more about that in a moment. So again, just to make it painfully clear, the potential areas a gap could happen. If this was yesterday's candle, the yellow candle, could be up or down. There are 5 basic areas that Monday's gap, if you will, could open up. And again, 72% of gaps across all zones, all sizes, have filled or finished profitably historically. But if you break it down by zone and just measure gaps in these different areas, then you can start to see basically what I think you'd expect, the delineation and win rate. Not much in the middle, but if you start getting to the extreme points, you want to be very careful because the win rate historically starts going down. As I mentioned, direction of the prior day can be considered, and in my opinion, it should be considered because that's really where you get that attribute of trader psychology involved. Okay, so let's get to the math. Concepts are great, but they're worthless if they're not backed by real math and some logic. So let's look at the delineation of all gap zones when you break them down into 10 gap zones, up days and down days, each with 5 potential zones. You can see gaps above the high of the prior day. That's a fairly significant difference in win rate. A gap above the high of an update, more than 70% have filled historically. Less than 60% if the prior day was down. And look down here, 54% if the prior day was up. And of course, there's one zone, a gap above the close of a prior update, but beneath the high, right here. Over 80% have historically filled. And because the sample size across all of this is 2,200 some, each of these zones has roughly 200 to 300 in them. So it's statistically relevant, at least in my opinion.